You are watching QLM Business News. Here are today's news stories. Investors exercise caution as Trump hints at fresh tariffs. Global financial markets showed mixed reactions on Tuesday as investors grappled with the implications of U.S. President Donald Trump's tariff proposals. While his inauguration speech avoided announcing new import taxes, he later signaled that tariffs on Canada and Mexico could be introduced as early as the 1st of February. U.S. and European stock markets opened with modest gains, while Asian markets saw slight upward movements. The dollar, which had weakened after the inauguration, recovered partially against major currencies like the pound and euro. Trump's trade agenda includes significant reforms, lower taxes, and deregulation, which could boost corporate profits. However, economists have raised concerns about potential inflationary pressures that could lead to higher interest rates from the Federal Reserve. In a statement from the Oval Office, Trump outlined plans for 25% tariffs on Mexico and Canada, citing issues such as immigration and the smuggling of fentanyl. A presidential directive also called for investigations into trade imbalances and alleged currency manipulation by other nations. China remains a key focus, with Trump linking potential tariffs to negotiations over TikTok's operations in the U.S. He warned that failure to reach an agreement with Beijing could be seen as a hostile act. U.S. equity markets responded positively, with the S&P 500, Dow Jones, and Nasdaq all gaining ground after a holiday closure on Monday. European markets also rose slightly, with London's FTSE 100 and Paris's CAC 40 showing moderate increases. However, Danish wind energy firm Rystad experienced a sharp 17% drop following news of a $1.7 billion impairment charge on a delayed U.S. project and Trump's comments about halting leases to wind farms. Oil prices dipped on the prospect of increased supply, while Bitcoin climbed amid Trump's pledge to support cryptocurrencies. Financial analysts have noted investor unease over Trump's tariff plans. Fiona Cincotta of Citi Index observed that discussions of levies on Canada and Mexico led to sharp currency declines in those countries. Tim Water of KCM Trade described the market mood as dented following Trump's signing of executive orders. Analysts predict Trump's presidency will reintroduce market unpredictability. Choru Chinona of Saxo Bank warned that investors should prepare for a dynamic policy environment and potential volatility. Trump advisor Judy Shelton defended tariffs as an effective negotiating tool, particularly with trade partners like Canada and Mexico. She argued that tariffs may not necessarily lead to inflation if consumers turn to domestically produced goods instead of imports. This news story is presented by QLM Business News, your go-to digital media channel. Visit qlmbusinessnews.com for the latest updates, and don't forget to follow us on Facebook, X, and YouTube. Support us by liking, sharing, and subscribing to help us bring you more stories like this.